These are the only assets that are severely undervalued. And the fact that gold, according to the Bank for International Settlements, which is the central banker's central bank, gold held at home is the only financial asset that runs no counterparty risk. Get it done, people. Time is running out.
To me, so much of what we see in a system, Christian, that is based all on trust is the erosion of the pillars of trust in American life. Whether you talk about government, the lack of trust within the government itself, the partisan politics, the Paul Pelosi's of the world being the best investor on the planet, these kind of things go unchecked. Members of the Federal Reserve, or even the Supreme Court are doing things that regular citizens would face repercussions for. They just get removed or they step down.
As of December 10th, 2025, gold has been trading firmly in the $4,218 to $4,223 range, marking a clear December breakout that reflects rising global financial stress. Silver has surged beyond $61, the US dollar index has slipped below 99, and the S&P 500 is hovering near 6,857, creating one of the most unusual and unstable divergences in modern market history. According to analysts Lynette Zang and Schectman, these are not ordinary price movements. They are stress signals. They are early warnings that the fundamental trust supporting the global monetary system is beginning to fracture. And once that trust breaks, precious metals, especially silver, tend to respond with speed, force, and momentum that catches most investors unprepared. If you own silver or gold, or even if you're just watching the markets from the sidelines, this may be the most important breakdown you hear all year, because what happens next could reshape how wealth is stored, protected, and valued worldwide.
Let's be clear on what a carry trade is. That's borrowing at a lower interest rate level and then taking that fiat money and putting it into a higher yielding investment. So the Japan carry trade, you might recall, was the big carry trade because they've been in a deflationary spiral with negative interest rates and either non-existent or negative interest rates since the 90s. But as we saw when they started raising the rates, that carry trade exploded. Well, then the US dollar was a carry trade. And in fact, the dollar carry trade outshines all other assets on a risk adjusted basis, which I think is like really, really interesting. Don't you think? After all, you don't really think of the dollar as being a weak and a carry trade. But record US government shutdown, uh-oh, now that carry trade is at risk of unwinding since the shutdown has ended. And that means that hedge funds and traders are rushing to exit that carry trade because of the volatility, right? This is the volatility in the currency, which could easily trigger a crisis. So the carry trade now is set to trounce the world's booming stock markets, right? Because it's so volatile, that has to be unwound, and that has an impact because if you're borrowing dollars cheaper and you're putting that money in stocks, well, you're using borrowed money to buy those stocks, aren't you? And if you have to unwind that trade, that means that you have to sell those stocks to get out of that carry trade. And that has an impact on the global stock markets. So you might have noticed the level of volatility and the problems in the global markets. It's not just here in the US, it's on a global basis. But what you must be clear about, especially since we're hearing so much and we've talked so much about the significant overvaluation in these markets, which are being led by traders. Well, the US equity premiums are in negative territory. That's not something that typically happens, but what that actually means is that if you're holding money in the stock market, you are more likely to lose that money. As well as the inflation loss of the purchasing power of the dollar, of the value of the dollar. It's a double whammy. The markets go down and you lose value, purchasing power value. I don't know. What do you think? I think that sounds like a good deal to me. But here's what the markets, those pundits, those talking heads that, of course, they only want you to buy, U.S. stocks now offer investors no return whatsoever on a risk adjusted basis. I think that's very interesting. Are you in the stock markets? Are you going to stay in the stock markets? If you make that choice to remain in there, you better be properly diversified so that even Wall Street insiders are telling you how overvalued these markets are and how you are not going to get your money out of them. U.S. stocks now offer investors no return whatsoever. They actually offer you a negative return because you can only convert them into dollars that are rapidly losing purchasing power value. And take a look at this relative performance chart. There is spot gold and spot silver, manipulated as it may be, but absolutely trouncing all of those U.S. market indexes and globally too. The S&P 500, the NASDAQ, the Dow Jones Industrial Average, and even Bitcoin. These are the only assets that are severely undervalued. And the fact that gold, according to the Bank for International Settlements, which is the central banker's central bank, gold held at home is the only financial asset that runs no counterparty risk. Get it done, people. Time is running out.
To me, so much of what we see in a system, Christian, that is based all on trust is the erosion of the pillars of trust in American life. Whether you talk about government, the lack of trust within the government itself, the partisan politics, the Paul Pelosi's of the world being the best investor on the planet, these kind of things go unchecked. Members of the Federal Reserve, or even the Supreme Court are doing things that regular citizens would face repercussions for. They just get removed or they step down. Medicine, media, law enforcement, you name it, it seems to be unraveling. And more so, the system's authority seems to be eroding from within, whether it be, again, our mismanagement of monetary and fiscal policy, fiscal irresponsibility, um, the way that we have gone around the world issuing sanctions. We're talking about 100% tariffs if they don't do this or if they do that. That's not a tariff. That's a sanction masquerading as a tariff. And excuse me, you know, since the end of World War II, the United States were thought of as the good guys who rebuilt the world and they championed democracy. But it seems when you look at this country now, Christian, that the moral high ground is gone and it's undermined by hypocrisy, a rules-based order, while at the same time we break those rules ourselves and punish other nations for actions we take. For example, look at what we did with Russia. This isn't a statement on the Russia-Ukraine war, but we kicked them out of SWIFT. We took $5 billion basically of their U.S. treasuries. We, in essence, defaulted on them and gave them largely to the Ukraine in the form of weapons, while at the same time, 22 years ago, we invaded Iraq, destroyed their country in the pursuit of weapons of mass destruction, toppled their regime. And you know what? We didn't find them, but guess what? We're still there today, occupying with military bases. And the world looks at us as being hypocritical. The U.S. now has a record almost $19 trillion in debt. Household debt is up 60% over the last decade. You have delinquencies in auto delinquencies, highest in 15 years. Subprime auto delinquencies, highest in 31 years. Student loan debt, all-time highs of almost 15%. Credit card delinquencies, highest in almost 15 years at 7.1%. You have a country that is engulfed with debt, a country that is divided between red and blue and rich and poor and black and white and vaccine and no vaccine and it's a country that is divided. It is a country that has lost trust in its institutions, and the world has lost trust not only in our institutions and wonder what the hell's going on with the country.
December 2025 is shaping up to be a turning point that financial historians will study for decades. The U.S. national debt has surpassed $38.8 trillion, climbing by more than $1 trillion every 100 days, a pace no major economy has ever maintained without consequences. During the most recent government shutdown alone, more than $600 billion was added in just a matter of weeks. But the deeper problem is not the size of the debt. It's the disappearance of confidence, the one thing modern finance depends on more than anything else. In the past month, the Federal Reserve has injected more than $200 billion into the repo markets, a level typically associated with crisis stabilization. Banks are increasingly avoiding overnight lending, not because they lack cash, but because they don't trust the collateral being offered. This marks a shift from a liquidity problem to a solvency fear, one of the most dangerous signals a banking system can send. Lynette Zang's warning becomes undeniable here. When trust fails, the system fails. Meanwhile, the U.S. dollar has weakened sharply, falling below 99. This has major implications for the dollar-funded carry trade, one of the largest hidden engines of global finance. For years, investors borrowed cheap dollars and poured money into higher-yielding assets. But when the dollar becomes unstable, that trade becomes dangerous, forcing rapid, often brutal deleveraging. This is why we're seeing volatility across global markets, even as the S&P 500 sits near all-time highs. Underneath the surface, the equity risk premium has turned negative, meaning stocks may now produce negative real returns after adjusting for inflation and risk. In other words, the stock market is rising while its foundation is weakening. This brings us to silver, which has now surged beyond $61, pushing into levels that indicate much more than bullish sentiment. Silver's breakout is being driven by structural forces. 1. COMEX registered silver at multi-decade lows. Registered inventories have dropped toward the 20 to 24 million ounce range, reflecting intense supply tightness. 2. Industrial demand is exploding. Solar manufacturing, electric vehicles, energy storage, and AI hardware are consuming more silver than miners can produce annually. 3. Global de-dollarization is accelerating. Central banks have purchased over 1,000 tons of gold in 2025, one of the highest totals ever recorded. Nations are reducing their reliance on dollar-based reserves and increasing exposure to hard assets. Andy Schectman summarizes the significance clearly. Gold preserves wealth, but silver revalues wealth. Silver's surge above $61 is not a short-term spike. It is the beginning of a revaluation, driven by weakening trust, tightening supply, global de-dollarization, and rising industrial demand. When trust in paper promises fades, real assets take the stage, and silver, because of its dual role as a monetary and industrial metal, becomes one of the most responsive assets in the world. We are witnessing the early stages of a shift in which tangible value begins to outperform financial abstractions. And December 2025 is the month where those early cracks became visible to anyone paying attention.
But I think are making pivotal moves away from the dollar and the treasury, which have been horribly mismanaged and have been weaponized. And you look at the U.S. government in the 6 weeks that we were shut down added $600 billion to the debt. In seconds, that's somewhere in the neighborhood of 20,000 years ago in seconds. So, you're talking about a country that is perhaps lost its bearing and greatly diverged from what we once stood for. And I hate to say that, Christian, because I'm a patriot who thanks God every day he was born in this country. This country has given me more opportunity than I deserve. But I look around me and I see a world largely over the last several years, although it seems to be moving back, where meritocracy was sidestepped for lifestyle, and I outworked people, and that's what gave me the opportunity to be where I am. But in a world that we lived in for the last several years, that wasn't as important as your race, your color, your social beliefs. These are the things that greatly upset me over the last several years. And I think now what the pity of it is that much of what President Trump is trying to do and to bring back the culture that was whitewashed right out from under us with election interference or the perception of it, the two-tiered judicial system perception of it, the wokeness, the lack of meritocracy, the immigration issues, and the fiscal irresponsibility has to have some form of repercussions. And they're beginning to see that all the way around if you look closely. So, I hate to sound like someone who is negative about the state of affairs, but I'll tell you that there are a lot of things to be concerned about. And, there's a fine line between pessimism and realism. I still think that there are wonderful opportunities in this country, and hopefully we can get our act together. And I have views on that, on how we can, and I think the administration is hedging towards that. But, yeah, we've kinda dug ourselves into a hole. Look, let's just put it this way. We have 38 trillion of debt that we talk about, but we also have, uh, almost 200 trillion in unfunded liabilities, Medicare and the Medicaid and Social Security and the government military pensions that are off balance sheet. Now, we talked about how many seconds $600 billion is, and I'm not positive on that, but I can tell you the reason I said it's around 20,000 years ago is a trillion seconds ago was 31,688 years ago. And we add $1 trillion in debt every 100 days. And we're a country that doesn't make anything anymore. And a country that's massively in debt. And you have AI coming, which will kneecap entry-level jobs 50%, they say, in the next 3 to 5 years. We have a long road ahead of us, and I have views on what I think this administration is doing. And there's nobility in it, by the way. They don't talk about it because I think they can't until it's implemented. But while there is reason for optimism, I'd liken the situation to the Shawshank Redemption. Do you ever see that movie?
I have. It's a great movie.
Andy Dufresne had to crawl through 2 miles of crap to get to the other side. And I think that's where we are as a country right now. There is something to look forward to on the other side, but what's it going to look like getting through it? And I think there is a time when debt matters as the world reserve currency, or fiscal irresponsibility matters as the world reserve currency, or integrity and trust really matters as the world reserve currency that is no longer pegged to anything but trust. So if I had to break it down, Christian, to one word, I think there's an erosion of trust. One last point, you're even seeing that in the banking system now, right? The Federal Reserve has injected somewhere in the neighborhood of $200 billion into the repo market in the last few weeks. That's crisis level intervention. And the repo market, where the banks trade overnight with one another, literally overnight, to balance their balance sheets or to make good on payments that they won't have liquidity for until the next day. There's twice the liquidity in the system as there was in 2019 when the repo market blew up. This isn't a crisis of liquidity, it's a crisis of trust. The repo market is, in essence, where a large bank will lend money to either another bank or a hedge fund overnight. The other entity posts collateral, either U.S. Treasuries or mortgage-backed securities, whether it be residential or commercial. We've seen a lot more of those in lieu of Treasuries. And these banks would rather keep their money parked at the Fed, earning the federal funds rate with safety, than lend it out even to their cohorts for 24 hours or less because they don't trust the collateral or the solvency of the counterparty. That's an indictment at the highest level of trust. So to me, this is all about trust, Christian, and hopefully we right our ways. Again, I have views on what they're doing, but yeah, to me, the biggest issue here is the erosion of trust from the main street all the way to the highest levels of government.
What December 2025 is showing us is clear. The world is shifting away from financial promises and moving back toward assets that hold real value. The debt is exploding, the dollar is weakening, The banking system is showing stress, and silver's surge beyond $61 is signaling that something much bigger is building beneath the surface. Lynette Zang and Andy Schectman aren't warning you for drama. They're warning you because once confidence breaks, the window to prepare closes fast. Now I want to hear from you. Do you think this silver breakout is the start of a major reset? And are you personally preparing for what could come next? Share your thoughts below. I really want to know what you're seeing and how you're getting ready. If you want more deep, accurate analysis on gold, silver, and the global financial shift happening right now, make sure you subscribe. 2026 won't wait, and neither should you. Stay aware, stay ready. I'll see you in the next video.